If you're about to sell your house, a common question on everybody's mind is capital gain. Will you be subject to capital gains tax when you sell your home? A homeowner could be subject to capital gains tax simply because of the increase in value of the home since you've owned it. However, there are ways to get around this costly tax. So, just what is capital gains? How does it work? Who's subject to it, and how can you get around it? Stick around, I'm about to tell you. Hello guys and gals, and welcome back to my channel. I'm AnnemaRieLaTulip with eXp Realty out here in the northwest suburbs of Boston. So capital gain on everybody's mind right now, right? Because homes are selling so far over the asking price that homeowners are making out with so much money when they walk away. However, capital gains tax can be pretty scary if you have to pay on that income, right? So what is capital gains? You will pay capital gains tax when you sell certain assets for more than what you paid for them. Now, homes, of course, and vehicles are included in this. Any gain that you make when selling a home generally needs to be reported to the IRS as an income gain. However, the IRS can and will give qualifying homeowners an exemption to this tax. So how much is capital gains? It varies. The tax rate varies on many different things. It depends on how long you've owned the house, your marital status, what tax bracket you're in, and whether or not the property was your primary residence or an investment property. For example, if you buy a house and flip it and sell it within a year, then your tax could be as high as 37%. However, long-term capital gains on a home that you've owned for over a year are generally around 15 or 20%. Now keep in mind, the tax is only assessed on the profit, right? If you purchased a home 5 years ago for $175,000 and then sold it today for $250,000. Your profit would be $75,000. You would then need to report that home sale and potentially pay capital gains on that $75,000. In that case, the tax rate would generally be about 15%. Now, there is one caveat. If the property that you're selling is your primary residence, the IRS will give you a tax break. You won't need to pay capital gains tax if you meet these following conditions. You can sell your primary residence and avoid paying capital gains on up to $250,000 if you file taxes single. If you're filing jointly, the first $500,000 of profit is exempt. Single, $250,000. You with me? Now, again, the property must be and must have been your primary residence for 2 out of the past 5 years. The IRS requires that you prove to them that it was your primary residence and where you've lived for most of the time of ownership. Now, here's another little caveat. The 2 years doesn't need to be consecutive. You don't have to show that you've lived in the home consecutively for the past 2 years. For example, if you've owned it but rented it out for 6 months here or 6 months there. Here's what's important. As long as you've lived in the house for 2 years, 2 out of the past 5 years, whether it be consecutive or not, you may be exempt from capital gain. Now, there is one other way to avoid capital gains, and that's a 1031 exchange. But I'm not going to go into detail on that on this video. I'll save that for a different video. There you have it, ladies and gentlemen. That is capital gain. I know it's scary, but as long as you have your ducks in a row, show the IRS what it needs to see if you qualify, and then you too will be exempt from this hefty, costly tax, which I'm sure is quite a relief with the profit that you've made from selling your house. Thanks for watching. As always, if you like my videos, please go ahead and click on that little red subscribe button. If you're in the Boston market and you're considering selling your home and you'd like some more information, don't hesitate to reach out. My information is in the description below. Once again, I'm AnnemaRieLaTulip with eXp Realty, and as always, your goals are my goals.